You should control the board. Don't give up board seats like it's candy. Hold it like it's gold.
Hello, and welcome to the Making of a Nobody. My name is Andy Walsh, Chief Incubation Officer at Nobody Studios. Today, I'm stepping in for the amazing Sajal, who is taking a day off from the broadcast today. So Mark McNally and myself will be bouncing around our big topic today, which is founders agreements. And I think there's going to be some interesting stories from both sides today, which is ultimately how does a founders agreement allow you to not only manage your business properly, but set up future investments, exits. It plays a huge role. So I'd like to welcome to the stage our Chief Nobody, Mr. McNally.
Hey, Andy. Good to see you.
You too. To kick things off, I'm fascinated. You've founded more companies than me, so I'm hoping that you've got maybe some interesting stories. But starting off, do you have any memories about doing a founders agreement where there was things that seemed really obscure or stuff that shouldn't be in there, or confused you as to why that should be put into a founders agreement?
So I can only speak from my worldview, right, or my life view. When I talk to folks, they get super into the weeds on details of any contract of consequence, right? And they start to worry about the worst case scenarios and the what ifs and all that kind of stuff. For me, it starts to taint an overall deal energetically with negatives. And I'm a big enough boy to know that in those scenarios, there's ways to resolve, there's ways legally to, solve things. But I do believe that you have to stay at the highest level. That's my personal belief. What are we trying to accomplish? What's in it for you? What's in it for me? How are we going to treat it? Like, there's some basics that need to be addressed, and compensation, equity, unwind plans if there needs to be one. What are the incentives if we overperform? What if I'm doing way more than I expected? What's that look like? What happens if you're doing way less than expected? These are like rational, in my opinion, adult level conversations. But what happens if this this thing comes in the mail and you don't respond in time? What's the penalty? Like, if you're getting into the weeds, again, not the wrong way of thinking, not my way of thinking. And I would encourage people to say there's not one right way to do these things, but the way that you engage with somebody on this tells you everything you need to know about if they're the right partner. Right? So again, if you have one style to be super detail oriented and they're like, that shit doesn't matter, and that's the way you're trying to negotiate it, and you care about being super detail oriented, that's what you need to know, right? Like, you guys are not going to be good partners. I prefer to be higher level and agree on the big things. If we can't get there and my partner wants to be in the weeds, again, not wrong, but it tells me what our partnership's going to be like, right? So I actually think it's not about getting an agreement right per se. It's about understanding the styles that both people are bringing to the table, right? And I think that's super, super important. So I think that negotiating the first contract can be a proxy to everything you need to know about what's going to come.
Yeah, it's a great point. My experience with it too is that it's amazing that even scenarios that you play, and I've got a really interesting story there, but the scenarios that you play out, it's not necessarily that you want to put that in the agreement, to your point, because you could have 2,000 different scenarios of things that may or may not happen. And having something above that that's more a process of how you deal with it rather than a pre-agreed statement of what you would do. And they're two quite different things. But the one that I had in my first company in 2012, our advisor was a lawyer and really helpful in getting foundations right. But he played out scenarios like, what if one of you go to jail? What if one of you cheats on your business partner's partner, so you end up having an affair, and all these things? And we didn't include most of it, but it was interesting that he deliberately put us through our paces to sort of stress test how we'd behave, alliances, And we did that with a group of 3 of us. So he became a moderator plus a lawyer at the same time.
Yeah, I think that's helpful. But I also think there's a negative connotation to it if you do it wrong, right?
Mm-hmm.
So I got a lot of great friends as attorneys, but I would just say in general, the the approach can sometimes be cold and unpersonal, and cold and unpersonal is not what makes partnerships work.
Mm-hmm.
So, and I'm always actually one of the things I'm really sensitive to is I look for people who default or hide behind an attorney.
Hmm.
So again, I'm just sharing my own knowledge. If people are like, "Hey, I'm sorry, this is what my attorney told me," right? So I have no choice. This is what my accountant told me.
Yeah.
If people default to this is what my advisors say, and so there's a whole category of people, at least from my experience, who have strong personalities. Like you love them for who they are, and that's why you're attracted to do a deal with them.
Mm-hmm.
But then when the deal comes down, they're like, "Well, I'm sorry, man. This is not me. It's my attorney. It's not me. It's my doctor. It's not me. It's my accountant. It's not me. It's my housekeeper." If they do that, like, who are you actually doing a deal with? Right? They're always going to hide behind that it's not me, right? So to me, at least the way I bring a deal to the table is you can always look me in the eye and say, "You said this, Mark. You know, you promised this. Let's figure this out." They know who they're talking to. I'm never going to hide behind a board or an accountant or an attorney or whatever. So I think that's super important for that to come out in the mix, right? Again, no offense towards attorneys, but again, I think it's super important that you understand the deal you're doing with the person, and if they hide behind that, it's a good warning sign, right?
Yeah.
Um, to your point about stress testing, I think that's super important. But my style would be to fictionalize it, right?
Yeah.
So I wouldn't say, "What happens, Andy, if you cheat with my wife?" That gets kind of personal, and now our heads in that space, right?
Yeah.
I might say, "What happens if you start to have a sexual affair with an alien, Andy, and that's bad for the firm," right? You can talk fictionally about something that still everybody understands the connotation of it, but you're keeping it light. Again, that's my style. It doesn't have to be everybody else's style, but whatever your style is, be true to it and use that as a point of fleshing out if you're going to be good partners.
Yeah, and it's interesting because I think that as soon as you come up with an idea, and whether that's as an individual, whether it's with friends that become co-founders, whether you're bringing someone in that you don't know, like for me, first and foremost is culture fit, and like you need to be able to know who you're dealing with, and sort of what may happen down the road. So, like for me, thinking about that piece is like you have plenty of conversations, you have ways of identifying sort of red flags from a culture perspective, but then when you go into the functional part of that, like the sort of things that you want to set up, and like I would start with something simple like roles and responsibilities, and I've heard horror stories of businesses that have had a team of co-founders that have gone in, didn't really define who would do what along the way and expectations. And within 3 months, they were already arguing about who was doing more than somebody else. This is my role, not your role, and getting territorial, and then had to reverse engineer what that looked like when things were already tense. And it's amazing that people go, "I know this person, I trust this person," but ultimately, I use the example of moving in with someone. If it could be your best friend, if you share a house with your best friend, it's like you're getting to know someone in a whole new way that you didn't otherwise. So being able to get all those things down place is really important.
Yeah, I couldn't agree more. And I think there's different spectrums, right? So
Mm-hmm.
it's funny when you say like founder agreements or co-founder agreements. Like that means so many different things to me, right? It's like what are your dinner plans this weekend? Like it's like to me, it's like what's your favorite music? Like this is big giant category, right?
Mm-hmm.
So, I can think of myself of like early stage founders, and you're recruiting other people to join the journey. Who's the visionary? Who owns the most of the company? Who has the most at stake? Is it really three people coming together to build something? Or is it one guy building something, recruiting two people to be co-founders, right? Those are
Mm-hmm.
different equations, different recipes, right? And are you recruiting your best friend from college because you just want someone to fill a role and you like them? Most startups have done that.
Mm-hmm.
Is that person gonna go the distance? Is it the right person to play COO or VP of sales or whatever role you gave them? Like we're all guilty, and it's a very normal path of, the first couple of years with startup. guess what? Your neighbor is a VP of sales. Your buddy from college is the head of finance. Your
Yeah.
sister's, brother, son's-in-law's like next neighbor is, the CFO. Like, of course, that's how you get things off the ground. But as you start to get traction and you mature, are they the right people? I don't believe you can always just go to the shiny object and say I have to uplevel my team. Some of the people who join you
Yeah.
early can and should go the distance. But I'm just saying it doesn't always work that way, right? So again, if you're the person with the vision, the passion, you're putting the most at risk, and you got 80% of the company and you're giving 20% to a couple other founders, okay. If they disappear off the face of the earth in a few weeks or months,
Yeah.
should they still have their ownership stake? Maybe not. Like there's ways to think through that, but that's where the nuance of the actual relationship, the company, the momentum of the company, who had the idea, all these things factor into the way you would think, right?
Yeah. And there's like really famous examples. And if you look at Microsoft and Bill Gates and the way that he kind of eroded his co-founders' equity, and a lot of that was built around responsibility, or whether it was a power grab. We weren't in the same room, but like it goes way back to some of the biggest companies in the world where that dynamic has impacted, and obviously it worked out. And I think you called it out before. So with these scenarios, let's go through a few important ingredients in the founders agreement. And I think that like scenario, if something happens and you have different levels of conflict, and it could be a really small thing, could be something quite significant on what you're doing, like having a really simple protocol about how you table conversations, how you resolve them. If you can't, do you have an escalation process? And I'm curious about that with what you've seen, where the role of board members, advisors, someone who's independent, and how you think about that escalation process if you do have something that's really important.
First of all, I think true partnerships are rare.
Mm-hmm.
So 3 people coming together and we all own a third of the company. Let's do something together. I actually think that's unicorn. That's like super rarefied air.
Yeah.
And if you ever talk to a couples therapy, person, they'll tell you like there's always an A-type personality in a relationship.
Mm-hmm.
And if you have two A-types, man, when you get that right, it can be magical. But more often than not, it's disastrous, right? And I just think the same way when it comes to partnerships. So I guess at some point, someone has to be a majority owner,
Mm.
some or larger owner. Someone has to be a deciding factor. Someone has to be a leader, and
Yeah.
other people have to agree to that and subserve to that. Doesn't mean you can't have open dialogue and debating and getting to the right spot as a company.
Yeah.
But the idea that you're somehow getting to a democracy, like I would never get involved in that ever again in my life, and I would never invest in it. I would never support anybody who's in that scenario. I just think it's 99.5% chance likely of failing.
Hmm.
I think it's really hard to get a complete partnership. So that's just my worldview. Doesn't mean it's the only way to look at it, but I just think that at the end of the day, someone has to be decisive. You have to be moving fast. You have to be driving towards someone's vision. It can be a group vision, but there will be at points in time that you disagree or market conditions change or whatever. And if you get into this paralysis of debate and 3, 4, 5, 10 people thinking differently, it can be really paralyzing for a company.
Yeah. And I've experienced that myself, where I've had co-founders and there's been 3 of us. So there's a natural vote that happened and we had equal equity. But you'd swing between sort of your allegiance on certain issues. And it can cause not only a divide within the room trying to solve, but also, weeks, months afterwards where there's a legacy of what you're doing. So you need to be pretty pragmatic and be able to go, okay, this is a very functional question that we need to solve for. It's not personal. It may feel personal, it may get intense, but establishing a platform and forum where everyone comes in to be constructive, and ultimately everyone's trying to get to the same point. But if it's too ego driven or personally driven, then it gets really, really intense.
And this is the part where your attorney's, scenarios is right. Again, if I were thinking about a three-way partnership, I'd probably play the role he was doing, right?
Mm-hmm.
Man, you can really love a person the way they think and be great partners. And guess what? 10 years from now, they decide they're gay, or they're going through a life moment, right?
Mm-hmm.
Or they get a horrible divorce, or something horrible happens in their life. Like people's personalities change, like their
Mhm.
worldview changes. God forbid, things happen to us physically and mentally, emotionally. Like, you can't 100% bet on the partner you did a deal with on day one 20 years from now,
Mhm.
unfortunately, right? And that's where it gets usually sticky. So that's why I'm not a believer in democracy kind of partnerships. I still think there has to be an overriding deciding factor for efficiency, and that for at least for me, that's a forcing function. It can be 39%, 61%, whether the ratio is 51%, but like it can be something slightly in the favor of somebody else, but it has to stay, guys, in the interest of decisiveness. Let's call it what it is, right?
Mhm.
This person's a CEO, we're the COO, we're the CPO. We take a subservient role to ultimately the deciding factor. And even if it's a 1% deciding factor, I think it's important for a business. It's hard enough to run these things. And just what you described, when you're trying to think about getting the entire coalition to agree a certain way,
Yeah.
what percentage of your time is going into politics? What percentage of your time is going into meeting your buddy for a beer, a drink, or dinner, breakfast, trying to plant some seeds? What amount of your energy and time is going into making sure that boat goes the right way versus building the company and making customers happy, making employees happy, right?
Totally. And it's like any partnership, right? You're going to have moments where you have huge highs and also huge lows. And my experience coming out through an exit is that relationship that you have with the person that you started with is very different on the way out than it was on the way in. And that's just par for the course. And it can be a positive thing. Sometimes it can be a negative thing, but you've got to accept that as well, that that's the case.
Yeah, agreed.
So segueing into then, it feels like a natural part. Then, as far as tenure in the sense of a lock in, as far as if you're committing as a partnership, how long you want your co-founders to be able to say, okay, I'm in for this, and they don't 6 months in get cold feet and then decide that they want to tap out. Like being able to set up that, and then the follow on from that too is very much around the sort of drag and tag situation. So going right through into scenarios where there may be an investment or an exit or something where you need to align. So let's tackle the lock in first. Have you seen that go good and bad? Like, what's your experience with having a co-founder commit to a minimum amount of time?
Again, I think vesting is an important part of this,
Mm-hmm.
right? Um, Again, if one person has a dominant idea and they're going to be the dominant leader, but they're recruiting a few co-founders, then a vesting agreement solves most of that, right?
Yeah.
You know, Andy, I'd like you to be my co-founder of this. This is my idea. I'm going to do it regardless, but you'd be a great X role, right? And I'm willing to give you X over this period of time.
Mm-hmm.
Which means if you change your mind and you lose interest or you get something else, excited or whatever, you get to move on and we don't have to give up all that equity, right? You vested some piece of it, but not all of it. Again, it's troublesome when it's three people coming together saying, we all have the same idea. Let's
Mm-hmm.
create something together. In that case, dilution can solve it. Say, great, all three of us own this idea, but now I'm going to continue with this idea. I'm going to be the CEO. I'm going to run it. I'm going to raise financing. The board's going to incentivize me because I'm the one actually building this. You're going to have your third of the original company, but that's going to be diluted. In the case of Facebook, a lot of people got screwed according to the Zuckerberg plan. And at the same time, they made a shit ton of money, right?
Yeah.
So, again, and a lot of those people didn't have anything to do with the company after the first year or two, right?
Yeah.
So again, if you're part of a year company for the first year or two, and it was still in Harvard in the dorm rooms talking about something, and Zuckerberg decided to screw you and move on, might have pissed you off at the end of the day.
Mm.
But now you're worth $1 billion and you're living in Singapore. I don't know, kind of worked out, right?
Yeah.
And he deserves to be the third richest guy on the planet. He's been working at it for 20 years. I think it can take care of itself in those scenarios.
Mm. Yeah, great. And then, like through that, the common path typically is an investment path of some kind, and whether that starts with family and friends, goes through more formal process, etc. There's a lot of conversation at the moment around investment and can businesses bootstrap and get to a point where they're actually revenue generating and sustaining that point without diluting capital. And there's a lot of dynamics that happen with investors, with board seats, things that can change the direction of your company, and that can be, again, go great, or it may go to a path that you don't want it to. Like, thinking about that structure, about how you future proof what that looks like, is that something you think that you would contract in the early founders agreement about your philosophy on that, or do you have it as a normal escalation kind of conversation that you discuss and solve at that point in time?
I would certainly think that the funding strategy and board strategy is something that is not very often talked about, but I think
Mhm.
is important if you can. I certainly try to do that with folks. I have very strong opinions about both. Um, and I do think it's the kind of thing that's a test drive,
Mm.
talking it out, playing out a scenario together. How do you feel about this? Do you understand? I feel this way. This is why I feel that way. It's just a good example of exposing potential misalignments before you have to get too committed, right? Um, but I do think the board dynamic is one of the most important, where where founders get pitted against each other, because the board will end up saying, well, I'm your biggest money and I know you need more money in 6 months, and I believe in you, Andy, but I'm not sure about that Mark guy, so I think you need to get him out. And now you're in a spot where, like, well, I want to see this keep going. It's my livelihood. All
Mm.
these other employees and investors who buy into me, and maybe I see what he's saying about Mark or Peter or Carl, but I love him and I'm loyal to him. You can be undermined as a leader, you can be undermined as a human with that board pressure.
Mm.
And I think it's really important to think through the board dynamics. And I think a lot of founders mistakenly stumble into really complex board situations. I've been maniacal about making sure that's not true for us,
Mm.
um, because I want to make sure that we can be decisive, and ultimately I want to make sure that commitments I make to people I can live up to, and I can never say, "Oh, sorry, the board disagreed." Like, I don't want to hide behind that. So I've tried very hard to make sure the board structure aligns behind my thinking.
Mm.
Um, but you need to have the best of both worlds. Boards can also bring difference of thought and challenging, and so getting the best of both worlds is something that I strive to do. But if you get the board mechanics and politics wrong, it definitely will screw up, founder partnerships.
Yeah, and it's interesting. I'm part of the fourth effect that you're aware of, and a lot of their specialty is around boards. And I went to a panel that they were hosting. It was really fascinating to look at. They had a lawyer, a founder, and a VC on a panel, each sharing their own view on what that looks like. And like, there was a consensus around early stage, if though the goal getting around 3 people who are on your board at the first part. Typically, it might be a seed investor as like that first person that's taking 15-20%. But the thing that followed after that was really interesting. It was around voting rights and making sure that the deal that you have in your founder agreement complements what you have from an investor agreement too, as far as the type of shares through to different voting rights, etc., and how those two come together. Because I've seen situations, not myself, but read a lot about them, where the investors end up having more power to be able to make decisions for exits,
Mhm.
for any sort of strategies going forwards, and that can be a real minefield if first time founder, nothing
Yeah.
about boards. So like getting that advice early on is significant too.
Yeah, I mean, I'm glad to go on the record as saying at early stage, if you are a strong-minded founder and you have a strong vision of what you're doing, you need to have control, 100% control.
Hmm.
You should control the board. Don't give up board seats like it's candy. Hold it like it's gold. You know, um, you should only be thinking about giving up board seats when you're really bringing in significant capital from a very strategic investor. That's how I think about it. And
Mm-hmm.
even if you have a board of three, you should appoint all three, or at least point two of three. So you should control the board, because in the earliest stages, you need that flexibility to learn and break things and fix things and change things. It's all on you.
Mm-hmm.
Even the employees and the investors that give you money can all walk away and go, "Oh, that guy screwed up," but it's still all on you as a founder, and you need the ability to do that. Now, as you mature and you bring in bigger partners, bigger capital investments, they bring different experience. It's completely appropriate to diversify your board, but you should still be fighting for control, or at least a friendly board, right? I think the minute you do the opposite too early, again, I'm not sure even the biggest companies and Facebook and Google have lost control of their board. I think they still control it. But if you were ever to lose technical control of your board, at that point you should be a franchise. It should be really obvious your business model, your scalability, your predictability, et cetera. And that's just usually not associated with early stage companies.
Yeah. Yeah, it's interesting. The trend at the moment in this year I've seen is this angel advisor, where someone's actually who comes in early at an advisor level, may not be on the formal board, but at that stage, having some capital in the game means that they're committing as
Of
well. As
course.
far
Yeah,
as, like, there's a lot of advisors that will go in and not contribute. I'm sure
of
you've
course.
seen that happen plenty of times. So, like, any advice there about how you establish the right workflow for the person that you bring in, the role they play, the time they commit, all those kind of things, to make sure that you're getting value for money, because you're diluting, precious equity, but there's a good sort of trade-off there.
Yeah, look, I'm certainly partial to people who put, skin in the game,
Mm,
if they're going to be an active advisor. Um, but I do think, could wear both sides of the hat. It's incredibly valuable to have people you consider very smart mentor type people who don't have skin in the game,
mm,
because they're not colored. Their advice is not colored, right?
yeah.
I've got a very good friend of mine who was one of our first investors, but has less than $10,000 in the studio, and could have easily put a lot more in, and had some, personal issues and other distractions that never made that come true. But I'm super grateful for it.
Mm,
He's one of my closest friends in the business world. He's a great mentor. I think I was a mentor for him early in his
mm,
career, and it switched roles. But the dialogues we can have that are so transparent, and he can call my baby ugly, and he can challenge me on anything I want to say. And I know he really, in the big scheme of things, has no skin in the game, right?
mm.
His small investment is not what he's thinking about. He's thinking about me. He's thinking about this, studio. And I just find this very healthy dialogue that won't be true for folks that I also have this similar respect for, but have put a lot of money or investment in the studio. At the end of the
Mm.
day, it does get colored, right? So I would advocate for both. It's a
Yeah,
mix.
great. And, like, just, we're at time, but I think a good way to end it would be from a nobody perspective, like going through early stage of fundraising with the crowd, and the way that we did that, and then your more traditional sort of angel investors. Like, within that, what are some of the considerations that you went through when thinking about investment levels, like their influence on what we're doing, and how you sort of set up that two-way flow of information to keep people motivated?
Yeah, I mean, I think we've done a decent job at it, but I wouldn't say it was overly sophisticated, right? Like,
Mm,
I think every startup founder, first of all, is trying to find money that's green. Like, they're just trying to find the capital they need, and then you hope that that capital is smart capital.
mm.
It's strategic capital. It opens more doors. It makes your journey better. Um, we were fortunate that that's largely what has come into us, but I wouldn't say it was by design. It was just like a hope and a wish, and we got lucky that that's how it played out. In terms of getting the dialogue right, look, I don't think we're ever perfect. A lot of things I think we got wrong, but one thing we've tried to embrace is just being transparent.
Yeah.
So, we try to be open about the things we're struggling with. We try to be open about the things we need help on. We try to be open, obviously, about the things we're celebrating. And so I think that's not only just a trend of where business is going and investors are going, but it's certainly what we're trying to push the boundaries on. But it's in your best desires and intentions, you still realize it takes energy and effort to be that way, right? And
Mm.
so, the other thing I tell people is, hey, if you reach out to me because I didn't update you or I didn't respond, treat me like you would anybody else in your family or a colleague. Just be like, hey, sorry, you might have missed this, and nudge me again. Like, our intention is to be responsive, and we will
Mm.
be. Um, and yeah, I think that's what I think I try to coach early stage founders to really challenge the boundary of being an advocate and being super excited and a promoter of what you're doing, and also being a real human. This is
Mm.
struggling. This is hard. This is a challenge. Like, I think that the blend is where we're making the real connections in the world. So
Yeah, great. Yeah, that's a perfect way to end. So, Thanks for the time today, Mark. It's for what started as a contract conversation, you realize pretty quickly that it sets the dynamic and the success, I think, ultimately for your company and how you run day to day, but also how you generate an exit. So very worthwhile to dig into. If you're interested to learn more, visit nobodystudios.com. We're often looking for people to collaborate, contribute to our journey. We have a big portfolio of companies, and there's plenty happening in 2025. So, and also reach out to Andy, so myself, which is Andy at nobodystudios.com, and Mark, which is Mark at nobodystudios.com. We can answer more. Otherwise, we'll be back next week, and Sage will be back in the driving seat. But I feel like we've done a pretty good job today, Mark. So thank you.
Thank you, Andy.